Oh, welcome to Pro Trader Strategies. It is a dull day in the markets, to say the least. Trying to keep our eyes awake during the trading for the most part. I'm not in on the crude oil trade right now, but the equities are putting me to sleep for the most part. Anyway, my name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. I think all of that out of the way, please don't mind the dog in the background chasing around a ball. About the most excitement I've seen today as well. So anyway, on with the overall markets. Not a whole lot of economic data today, and for the week for that matter. We don't have a whole lot of really important data points other than on Friday we do have the non-farm payrolls, or unemployment as we used to call on the floor. So today we just got wholesale inventory slightly upticked, and last month's revision was also slightly revised higher. Came in this month at 0.4%, was expected to be 0.3%. Not really a widely looked at number though. On to the overall markets. Crude oil, like I said, down over $1.60 now, down touching this trend line. Now this is going to act as support as it acted as a resistance on the trend beforehand. So the bulls want to get below that number, and we're also getting a little overdone to the downside as soon as we start getting below these value areas. So we could easily see this time node move back down into the middle here. So keep that in mind and looking forward, but we are down below that 50 Fibonacci level as of now pretty solidly, so it looks like we're going to stay there. The next line in the sand is really whether or not we break into that trend area again, back into this trend channel. On to gold futures, up 16 points, having a massive move higher today, despite the fact that there's not a whole lot of movement going on in the equities, just a little bit of fear going on in there. And once it broke above that value area high, it really just took off to the races, as basically the shorts kind of scrambled to cover when we broke above this resistance area, so that lined up with those tweezer tops here and here. Then as soon as you get above that, people were really probably shorting that, hoping that that would hold. And once we broke above that, it was kind of like a race to get out of some of those shorts. So I think it's more of a short cover rally right now. Bonds up one tick on the day. It looks like they're up a lot more than that for the most part, but that just has to do with where the overnight session opened as well. So we're just up one tick based on Friday's close. Then on to the VIX. I just wanted to talk about the VIX a little bit. It's up slightly, even though the markets are in negative territory, but only albeit by a couple of ticks. Do you think with some of that movement going on in crude oil and stuff like that, that it could send the equities a little bit higher, but we're not really seeing that right now with the overall market. At least as of lately, that kind of seems to be the trend. It could be that because crude oil is so far down, we're starting to see some people throw money into gold and maybe get a little bit more fearful about the equities. But the overall economic picture hasn't been that bad, really, in my eyes. All right, on to the Dow Jones, down almost 20 points, was just down 23, so off the lows of the day, down 19. NASDAQ, flip side of the coin, up 10 points on the day. Not a whole lot to see here. It's mostly an inside day. If we look at the E-mini S&Ps, down 2 on the day. For the most part, that is unchanged and right here in line with where the point of control is, give or take a few. This is a 30-minute chart of the E-mini S&Ps. It kind of just shows you here that overnight session really rallied up got long, and then coming into the day session, as we normally will see, is that the longs have a tendency to race to cover coming into the day session. But for the most part, we're seeing a tight range from 24.44-ish, 24.25 to 24.38-ish, right around there, you know, close enough. Anyway, 6-tick range, just not a whole lot to talk about with the mini S&Ps. Then on to Apple. These are a couple of trades that I'm looking to get out of and I've gotten out of. So talking about the IRA, trying to get out of my September 155, 157.5 put spread in there. Trying to get out of those for 50% of the max profit on there. It's not quite there as of right now. I did it for 80 some odd cents, trying to get out for 47 cents. It was kind of close earlier today. Put it in a GTC. It's trading around 60 cents right now. That's the beauty in being naked short these puts, is that you're able to get out of them, as shows up in my IRA, or from my IRA to my trading account. My trading account, if you remember, I was short the September 150 puts. So not only am I further away, I was able to collect a much bigger credit of $1.15 on those. Was able to get out of that trade for 50 cents today. So 50% of my max profit. And remember, on that that put spread that's in my IRA, that I only was able to collect about 80 cents. And keep in mind that I was in the 57.5, 55 put spread. So a little bit tighter to the market. Not able to collect that much credit, but you know, that's what you get when you have to trade a spread. You ought to get closer to the market, and you have to accept a little bit less because you have less risk, right? Well, at the end of the day, it's more risk because I'm closer and I have to stay in that trade longer. As far as I'm concerned, all of those different ancillary things going on in and around that creates more risk. Despite the fact that I was naked short the puts, it seems like there is a lot of risk there. But at the end of the day, I was able to get in and out of that trade rather quickly for 50% of my max profit. So that, all of those things, lowering my risk on being having a loser, I should say, and by increasing my quote-unquote risk, the probabilities of success, increasing my probabilities of success, decrease my risk in my eyes, because the risk of losing are much less. So I don't really look at the risk as in how much risk in this regard I'm taking on losing a trade, but the risk involved in having to stay in that trade longer and increasing the probabilities that I might not be successful. So that's just my soapbox on being naked versus the other. And then on to XLK. XLK is a trade that I've added to both my IRA and my margin account. And with XLK, I was able to create a couple of situations here. Again, same situation with like Apple is the IRA. I needed to create a spread in there to make it IRA appropriate, if you will. And I did the October, sold the 59 calls, and then bought the 60 calls to define that risk, and collected a credit of 32 cents in there. So looking for it to stay below the 52-week high in there. And then in my margin account, I went in there and sold the October 60 calls for 28 cents. So we're looking at apples to apples in a sense. In my IRA, I had to get closer to the market to still achieve that 30-cent credit. And in my margin account, I'm able to get a tick higher, another full dollar higher, in order to achieve my credit of right around 30 cents, give or take a couple pennies, right? But I'm a full dollar higher, able to collect right around the same credit as in my IRA, which is, in my eyes, a little bit more risky because I had to get closer to the market. We'll have to see. I'm going to play these out on these daily market commentaries, see if the probabilities work in my favor, and when I'm able to get out of these particular trades and and hopefully it would be for a profit. All right, so check that out. Stay with us. Friday's webinar is going to be on the long straddle. So basically, I'm going to be talking about that. Yes, you can go online and figure out how to do long straddle. It's very easy, but I'm going to teach you the right environment to set this strategy up in order to increase your probabilities of success. Because if you set this up in the wrong environment, you're destined to lose some money. So check that out. Go to ProTraderStrategies.com. That's what I talk about all day long, is the probabilities, especially in these webinars. So check that out. All right. If you can't take that, take it easy.